What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, aka JT, aka J On, aka Sherpa Winfrey, and I'm the host and producer of Domain Sherpa, where all roads lead to domains. Today's show is a Sherpa Short, where we usually dive into a domain topic, an article, or something and dig into it for a bit. Today, we're going to get into the Escrow.com Q4 2025 Domain Investment Index and see what's going on with the data and all that good stuff. And we've got a special guest to talk to us about that. We've got the link to the report will be in the show notes, so definitely check it out if you haven't seen it yet. And yeah, so with that, let's just get right into it. Over to my left, we got my boy, the one and only Andrew Rosner, aka Morpheus, aka the Dirk Diggler of digital assets, aka Bob Lee Swagger, the sniper, aka Drew. Drew got what I need, aka every Rosner has its thorn. Never gonna give Drew up. Get Rick rolled. The domain Don is in the building. What's going on, man?
All good. All good. I'm excited to dig into the numbers here with escrow.com. I plan on being the let's say the face of the industry, asking the tough
Ooh.
questions about escrow.com and some of its shortcomings and what our good friend Tony here, who has been a very strong ally and partner for us over at escrow.com and helping us fix problems as they arise, uh, is in a new role. So first off, congratulations to Tony,
Yeah, we're gonna get
Director
to that,
of
man. Come on, we
Operations.
haven't even got to the intro yet for him. You know what I'm saying? So
This is my intro.
all right, fair enough. Go ahead. You want to do
So
his AKAs
anyway,
too?
I'm excited that we have a new Director of Operations at escrow.com who can help guide us to the promised land, to a fully functional, outstanding third-party escrow service that our domain name industry can rely upon in a trustworthy manner.
Good
Best of
stuff.
luck.
All right. Well, last but certainly not least, we got our esteemed special guest on the show, the one and only newly appointed director of operations at escrow.com, the one and only Tony Yan, aka Tony, aka Tony Robbins, aka Tony Montana. Say hello to my little friend, aka Tony Above and Beyond, aka Tony to Infinity and Beyond. What's up, dude? How are you? Welcome to the show.
Hey, doing good, doing good. Again, busy week, busy start to the year, but it's very excited to be here. First podcast, so thank you guys for having me.
Yeah, man. Well, thank you for being here.
Is
And
this your first podcast ever, like of any sort?
Yes, it's my first recorded podcast. Believe it or not.
Wow,
oh,
first for everything. Okay.
okay,
All
yeah.
right.
So, all right. Well, we're gonna have you on the hot seat a little bit
You
today. You
are
know,
you're officially a Sherpa now, man.
yeah,
There you go. I love it.
yeah, yeah. It's and obviously we've got to know you over the course of these past year or so, and in an increasingly important role, obviously taking on more and more responsibility at escrow. And like we said, congratulations on the new role and the promotion. So Billy, give him some cheers, give him some congratulations, give him some claps. Let's go. Let's add that in. And welcome, man, and welcome. So Drew, where do you want to start, man? I mean, I think you've kind of got a
It's
bit of
like
an agenda here.
no, I mean, look, it's a bit like if you're in the military and you get a promotion and they're like, you know, here, put the put a little more color on your uniform. By the way, come into this room. We're gonna read you into this new program, and you walk out of there. You're like, you're not smiling anymore. Uh, anyways, uh, no, I think we should get into the extra numbers. I've got comments and I you know, I want to make it a little spicy because you guys took it upon yourselves to put a little editorial on this report, which is not unwarranted, but I will push back on the
All
narrative of
the report, the sharing of this information. I think that it's always a good thing, right? It's definitely positive steps forward, and it's much appreciated. I would agree about the .ai domains. I mean, we've kind of they've been the hot topic of conversation on many a show over the last year or two. And I think when you look at the data and you see that chart, you definitely see obviously a big spike. Interestingly, how 2023, 2024, were somewhat similar, in at least, in one of the graphs, in the AI containing exact English words is the one that I'm looking at now on page 8. But obviously 2025 was like a big old, like, sort of somewhat of an explosion when you see like it looks like it's well above and beyond what it had been in those prior years. So yeah, I think that absolutely makes sense, and it's what we're seeing even in what's being reported, what we're seeing in some of our own business and things like that. So, um, Drew, does it change your narrative on .ai domains?
No, I mean, again, I think, look, there's a couple of things. Obviously, it makes great clickbait to run headlines that say, .ai domains are skyrocketing. They've gone up 300%. The truth is they still remain a very small marginal addition to .com. The market is .com, and, .ai is still a fingernail. Uh, I think it is super impressive that that trend has continued to run for as long as it has, that prices have achieved the levels that they have. I think that if we were looking at median prices instead of mean prices, you'd see a very different chart. I think that chart is skewed by um, a number of very large, 6 and 7 figure .ai domain sales, where I think, at the median instead of the mean, it's probably something more around $20,000 to $25,000. But there have been a number of outlier sales, and that in and of itself is news, and that is proof. I mean, people paying for something sets the price, right? And so those sales are happening. It certainly is a strong market. We are also benefiting from that market, but it's a clickbait sort of narrative, because all you have to do is sort of scroll down a little bit and you can just see like what part of the AI market actually made, what it's 10%, I think.
Something like
Uh,
that.
right. So, look, that's great. That's a lot. It came from, 0 to 10% in 4 years, 5 years. That's huge growth, no question about it. But and again, the only reason I push back is because, we get this every day. JT, how many people, or Sophia, as well, how many people emailed us just in the last 48 hours with a .ai domain name that they want to sell?
It's also just like huge
It's
portfolios
hundreds, it's
as
literally
well.
hundreds. And then of those, let's just say it was 200 people emailed us saying, I want to sell my .ai domain name. Of those, 3 to 5 are actually like of any value. And
Yeah.
of those, 2 would be domains that we are interested in maybe taking on for brokerage to sell. Maybe even it's 1, right? And so you're talking about 1 to 2% of the people that are trying to contact us to sell a domain that they own and are, seemingly paid a lot of money for, either in an auction or whatever. Um, these people all believe that they're going to sell their domain. They come to us and they say, I don't want to throw anybody under the bus. So I was about to say a domain. I'm not going to say it because it's the last guy that emailed me. This is a keyword that everybody knows. You use it. It has to do with telecommunications. It's a hardware word. And it, it has nothing to do with AI. And you put these two together and it doesn't make a good domain name because the left of the dot and the right of the dot, they have to have some kind of connection. Otherwise, it doesn't, it's not something that will ever sell. And so the problem I have with the whole .im market is that you have all these people hyping the market and hyping the market. And what it's doing is it's leading domain investors to go out and register or not even register. It's go into the auctions and pay hundreds of dollars, thousands of dollars, and even tens of thousands of dollars to buy these just domains, these .ai domains that cost $100 a year, and you're never going to sell it. My point is simply that, like, I don't know. I don't think we're being crazy. I think if we said it's 5,000, we're being super generous. And
Mhm.
if we're saying it's 2,000, we're probably directionally correct. 6 and 7 figure domain names that sell per year in the aftermarket. So if it's 2,000, uh, of those, it appears AI is roughly 10% of that market. So let's say there's 200. Even if we said there's 500, I had 200 people in the last 48 hours emailing me that want to sell their piece of shit .ai domain name for 100 grand or more. several of them think that it's worth 7 figures. And all of that is because people are out there hyping the .ai market. And the reality is there is a very small handful of people. It's funny. We have done 3 7-figure transactions for a .ai domain, and we've done, I don't know,
50?
15,
Oh, I was gonna say
20 6-figure transactions. And over the last 3 4 years. And I probably sold one of the first 6-figure .ai domains ever. I fixed .ai back in like 2022. I sold for 6 figures for 125 grand. And so uh uh my point is that leaves like 20 open slots. No, sorry, 200. If we're saying 2000, there's 2006 and 7 figures sales per year. And the AI market, the data says, is 10% of those sales. That leaves 200 total slots for a 6 or 7 figure sale per year. That sounds directionally accurate to me. Maybe it's 100, maybe it's 300, but it's not 1,000.
Hmm.
And so uh, that's 200 open slots to sell a 6 or 7 figure .ai domain name per year. And that number is probably diminishing, right? So as there's more and more consolidation, and as less and less of these early business models actually are demonstrated to be profitable, right? So, but let's just keep it simple and call it 200. Like there are, I think the last time I said there's 1 million .ai domain names registered now. Is that right? Am I crazy? Something,
No, that sounds bad.
it's the correct order of magnitude. And so, um, and I bet you 80 to 90% of those are owned by speculators. And we get those people emailing us every day trying to sell these domains, and they don't sell for those prices. The only time they do is when there's a buyer and the buyer shows up and says, I've decided that's the domain I need to be. But that's 100 to 200 people a year. And so you are better off going and buying a freaking lottery ticket. You have you know what I'm saying? Like you're let's just say roughly you're 1 million people out there that are vying for one of 200 seats. That's a really bad game of hot potato. Like,
Hmm.
you know what I mean? It's like musical chairs. You lose $200 every time the music stops. So, anyways, I am super impressed with the volume and the growth of .ai, no doubt about it. But I think the whole market is so overhyped, and you have a lot of people paying a lot of money. They've created this super artificially inflated .ai market because people have paid crazy prices and they're hanging on for dear life and they still think the dream is alive. And everybody thinks they're going to be one of those 200 every year that gets the 6 or 7 figure sale. And the truth of the matter is the guys that are getting the 6 and 7 figure sales, yes, they've made all their money, but they're also holding bags of hundreds or thousands of these that cost $100 a year. And they're going to continue to hold the bag because they think their early success is going to lead to later success. And I don't think that's true. But anyways, that's enough on the .ai. Again, I'm not shitting on .ai at all. What I'm shitting on is the narrative that's being promoted in the market. And, Escrow.com basically leading with, 300% increase in .ai prices. It's like, no, the value of .ai did not go up 300%. There are a few outlier domains that makes the mean price of these sales look very inflated. I'm responsible for several of those outliers. And the actual median price is more like 15, 20, 25 grand. The 15, 20, 25 grand, that's the real median. And the again, that doesn't increase. Even if you have it priced at 15, 20, 25 grand, you're probably priced at the market, but you're still vying for one of those 200 seats.
Well, I
So
do have a question here, Drew, for
talk to
you.
me. Talk
Yeah.
to me.
So what are your thoughts on how much of this volume is based upon individual, again, like you said, speculators or, folks that are holding these domains with the pure intention of, resell at higher value later date
The
versus
transactions you're seeing, I bet you it's at least 80% or more end users.
yeah, well, what I was going to say, compared to, perhaps a company or organization that's picking up one of these domains as a secondary domain to their
Mm.
.com or to
Oh,
whatever else they're hosting on.
no, I think you're right. I think there's a lot of purchases that are happening for defensive measure. That's the
Mhm,
vast majority of the transactions that we've done
mhm,
were companies, not the outliers, right? The people don't pay the outlier price unless they're going to utilize it, right? But
yeah,
the vast majority of .ai domain sales that we've done have been defensive purchases by a company that operates on a .com.
mhm,
And they just say, "Oh, I don't know what's going on with this .ai thing, but we probably need to have it." Or we don't want anybody else having it, so we might as well get it, right?
yeah.
So we've done a lot of that, but the vast majority has been defensive, not offensive.
Mhm.
Mhm.
Well, that does kind of lead into the next question, which is, again, separating what you're saying is kind of the outlier versus the median, which, again,
Mhm.
fair enough. And this is what we also see in data. So, again, foreshadowing some of the things to come here, if you were to go down into some of the other, breakdown categories, you'll see that, certain individual quarters or months or whatever the case is, you'll see a massive spike in the valuation of, one particular category. And that's just because of one or two outliers that are kind of carrying the whole thing, right?
Yeah,
How
of
much
course.
do you think that the .ai is more carried by the outliers compared to the other, .com categories?
Yeah, I mean, that's just a statistical problem, right? So the broader your statistical, um, um, the base of
Sample size. Yeah.
data sample size, exactly, that's the word I was
Yeah.
looking for. The broader your sample size, then the least is I can't speak today. The broader your sample size, then the lower statistical influence
Yeah.
any individual sale has, right?
Yeah.
So, in the .ai sample size, one large, if we're set again, let's just say, you know, we landed on 200, 6 and 7 figure sales per year, and you guys are, I'm going to say 60 to 70% market share on non-marketplace third party domain transactions, particularly high value. So let's just say that, you know, 100 of those, or, it's 120, 150, whatever it might be, of those went through you.
Mhm.
Okay. Uh, if that's it, if all you've got is, it's just for easy math, if I'm going to do public math, always a bad decision. If you have 100 transactions that went through escrow, okay, of .ai domain names, and we're talking about only statistically meaningful, then uh, one seven-figure sale is going to move the needle significantly across that sample size, right?
Yeah.
The mean price is going to adjust dramatically, um, just on one outlier sale. Never mind if you've got 5 outlier sales, right? If it's
Yeah.
more than 5, it's probably not an outlier, but in a sample size of 100. So I think that outliers in .ai or any other statistically minor category
Mhm.
uh, is going to be extremely impacting. An outlier sale is going to be extremely impacting on the
Well,
median, on mean price.
totally. And this is part of it is also data reporting as well. It's like how much are you
Yeah,
willing
why do you
to
choose
buy?
to use mean instead of median?
Yeah, so that's a great question.
Or
So
why not include both?
yeah, so this is one of those things where when I took a look at this report, one of the things that came out to me, stood out to me was that, we this year and the last couple of quarters we have segregated the numbers out quite a bit more than in the past. So what I've noticed is because of that, we are essentially dividing and segregating our sample size further and further down. So to be honest, I wasn't the one that calculated, all these numbers, but I'm not 100% sure exactly, how how much sample is left within each of these categories, right? And that's one of the ways that you can use to normalize some of the trends that you're seeing is, we can kind of parse out some of the stuff at the higher end and, find a new way to define that category, whatever the case is, to represent that data. But then you're getting to a smaller and smaller and smaller sample size to the point where how valuable is this data when all we're doing is looking at, less than 10 or 20 transactions? Right. Let me
Yeah.
throw you a curveball here. So how much of this, skewing the mean, let's just call it this observation that you're having, is to do with specifically .ai versus the domain industry as a whole? Because, part of the reason why I'm asking this is because when I look through the data and I actually know about the transactions that happen, behind the scenes that results in the data looking this way, I feel like this is a domain level trend. That certain high, valuations of domains with the right buyer, with the right market segment will simply outvalue everything else.
Oh, I mean, no, look, I mean, that's not a curveball. I mean, that's literally the basis of my business. Domains are up and to the right forever.
Yeah.
And so, yeah, I mean, right buyer, right timing, price,
Yeah.
you get,
But
buyer,
but
you just get a seller who's willing to say no. And then you get outlier prices and those prices keep stacking. They stack
but
year to year. I've been doing this, you know, a long time and they just keep going up. And the reason is that, there's increasingly less of them, and increasingly, more demand
mhm,
from a geographical standpoint, from a business sector standpoint, from a growth standpoint, from every 4 years, basically a new sector
yeah.
becomes the darling of funding, right? So all the
Mhm,
funding is flowing it's flowing to the NFTs and digital asset sector. And then now it's flowing all to the AI sector. And a few years ago, it's flowing all into the lead gen sector. And a
yeah.
few years before that, it was flowing all into like home services. And,
Mhm,
you know, it, it's cyclical. And basically it's every 4 or 5 years, the funding gets redirected
yeah.
and some new industry emerges and that creates a Cumbrian explosion of new companies and those companies are all chasing after the same generic brands and the only curveball is that now in this new Cumbrian explosion of AI companies there happens to be a domain extension that fits their bill. The reason why I don't believe that this is I just don't believe that. I literally don't believe that. It's nothing about the domain extension itself. It's a fundamental flaw that I think people overlook, which is simply that by definition, in my mind, if everybody's right about AI, well, then there's going to be like, I don't know, 5, 10, maximum 100 AI companies. Because it makes no sense. No, you don't need, what was it? I saw the most perfect example of everything I've been saying for 2 years now the other day. And it was like, somebody had like, I don't know, it was like, this wasn't it. And I'm sorry if this is your domain, but it was like writing.ai. Okay. And this wasn't it. I'm just making this up. It's just purely theoretical. And, they're like, oh, but the best thing that AI is used for is writing. And so, writing.ai, and they launched a startup. It was a real startup. And they got funding. I think they raised like $8 million and they launched their thing. And, somebody out there thought, wow, I hit a home run. Yeah. And then they realized, oh, wait, actually, somebody with a $10 subscription to one of these LLMs, actually, they don't need to go to writing.ai and have another subscription or
Yeah.
even log in or, just literally give it to Claude, give it to Grok, give it to whatever, so it doesn't make sense. By definition, every single one of your SaaS businesses, every single one of your little tools, they're all just going to be a function of a larger model.
Mhm,
And so it doesn't make sense that there's going to be 10,000 AI companies, 100. What are you talking about? People are going to have maybe a year, 2, 3 years from now, no more than that. People are going to have one, maybe two subscriptions to different AI companies. And there's going to be businesses that are not AI companies.
mhm,
But there isn't going to be 100,000 AI companies. There isn't going to be 20,000 AI companies. There's going to be 1,000 AI companies. There's going to be 10 or
yeah.
20 because they're going to be competing on something, but basically it's all commoditized. Everything that you think you know and love is a commodity. Everything you worked your whole life for, it's now a commodity. Everything, every skill set you think you have, it's commodity. And so, and again, I actually don't even necessarily buy in that we're at this AI apocalyptic or growth. I don't have a positive or a negative view. I actually don't think that there's any there yet. I think that this is a lot of hype. But all that said, even if it's right, there it doesn't make any sense that in the internet, it was the app layer, the application layer that got all the money, right? It wasn't the browser, it wasn't the protocol, the TCP/IP. It was the application layer. It was the Facebooks and the Googles, and it was the application layer that garnered all the money. In the AI world, the application layer is going to be a part, right? We're still on the internet protocol.
Mhm.
And so the AI is the application layer. And there's only going to be a handful of them that need to compete. And everybody else is just a feature set of those companies. So, anyways, that's the long term. And when I say long term, I mean literally like 3 years max
Mhm.
view of why I just don't think that the AI thing can be more than a short term trend.
One of
Well,
the solutions to this, I'm thinking, is should we start calculating things like standard deviation? Should we start
Well,
calculating
that's
that?
what I was thinking about. But look, I'm not trying to overcook the turkey here. But
Yeah.
yes, that's really what you
Yeah.
should be doing.
Yeah.
hey man, data. I can't make jars without clay. You know what I'm saying? And obviously, the better access to the data, the more informative it is, the more accurate that it is, then I think the better it is for everybody. So, all right, well, look, and like we say about the .ai domains, this is the last thing I'll say, and then we can move on because we only, we're gonna use
You know
all
what
the
I
time
find super interesting is the
Oh,
domain
we
names
don't move on.
almost.
domain names containing exact English words by TLD.
Uh-huh.
And what I'm looking at actually is .org, and it's like more or less just box steady,
Mhm.
like
Yeah.
but basically the whole time scale, it's like more or less, but more or less steady. And it's interesting because it doesn't match with what we are seeing. We're seeing an increased demand and higher prices, not astronomically. We're not talking about your bloviation in .ai. We're talking about just a tangible increase in sales volume and price of .orgs.
Hmm.
And it doesn't seem to be reflected in the data,
Well,
interestingly.
.org would mostly be out of the United States, would it not?
No, I would
Not
say mostly
necessarily,
in the United
no.
States, almost
Yeah, exactly.
exclusively in the United States, I would say.
Well, yeah, that's what I'm saying is .org is pretty much a United States only.
Yeah, for the most
Yeah.
part. There's
So,
a lot of corrupt NGOs in Africa as well.
well, those aside, talking about the real meat of the
In
data here.
Minnesota, maybe is you want to make? Are we
Yeah, in
gonna-
Minnesota, you know what I'm saying?
Yeah.
But they hand reg that shit, you know what I'm saying? Because they use typos. You know what I'm saying?
So,
They don't use, what was it? What was the good one? That was good. It was like, what was the name of it?
I
Something
don't.
Learning Center.
Yeah, I don't
It was
remember, but
like
yeah, they're
missing letters. They'll say they
anyway.
like the typo version.
yeah, but on that observation of the .org, I think one of the things that we're seeing here at Escrow is that a growth in international activity here on the platform. Like one of the big observations was a substantial notable growth in China based
Yeah.
activity. Well, and this is something that I was sharing with Sofia, earlier as well. Is on Escrow, you don't really see a lot of China to China transactions because there's just no need, right? Because China has their own systems, their own ways of moving money and all that kind of stuff. Fine.
Well, it would literally be like
It would
brain
be.
dead to say, like, let's send money out of China to send it
Yeah.
back into China. Like,
Especially since we
that's
don't
like,
support RMB anyways. So it's
yeah,
just you'll be converting to USD and then converting back. So
yeah.
anyways, the type of transaction that we see is China to global, right? Or global to China. We're selling a domain to and from, the China market. Same thing as Europe, same thing as,
But this is
APAC.
also cyclical, right? Now,
Yeah.
the China cycle to me seems to be a business cycle. Like, so roughly 8 to 10 years. And for every 8 to 10 years, you see a massive boom in China. And I think that this has to do with currency controls personally. But
Mhm.
nonetheless, um, uh, it is cyclical. We've seen
Yeah.
this, right? We'll see a giant boom in the last 18 months, 2 years, giant boom.
Yeah.
Uh, well, let me think about this for a second. Uh, it actually is more like 3 out of 8 to 10 years
Mhm.
because what happens is you get a big boom where domains are going from the West into China. and then it cools off, and those domains come out of China and sell back into the West.
Mhm.
And then 8 years later, boom, again. And I think that this has to do with credit cycles and so, sort of global macro. But um, um,
Well, I mean, China's
that
always
would be
been
my observation. But you got the data.
I mean, China has always been known to have very strict currency controls and where and how and when people can move money around and so forth. So,
Yeah.
regardless of if it's for an individual or for a business, what we do see is currently right now in the current state of affairs, there is a increasing need for, global transactions coming in and out of China.
Are
So,
you seeing more going in or out of China?
Both actually.
In equal weight, or what? If you had to just, and I'm not
Yeah.
putting a gun to your head, but like,
No,
just
I get it.
what's your gut instinct? Do you think there's more deals going into
I
China,
think
selling
I
in?
think it is both. I think it is both. I think there is, again, I don't have a list of transactions off the top of my head,
Yeah.
but from the ones that I've seen anecdotally, I've seen it go in both directions. I've seen
Yeah.
Chinese buyers spending massive amounts of money to buy, these domains and keeping them within China. And then there are also those who are looking to liquidate, out of China as well. So again, are those tied to individuals that are, moving in and out of the country? I don't know. I have no visibility into that, right? But what I will say is, the appetite for Chinese buyers and sellers to engage with the Western market is increasing, and that specific appetite for Western currencies have also been increasing.
Hmm. That's interesting because I think
Yeah,
in the past it was mostly buyers from China transacting through escrow and maybe mostly supported by Chinese brokers, at
yeah,
least from my time I hit there. And that's when there was a huge reduction as well, especially from like three characters or three number dot coms. That obviously still escrow doesn't see as many because those are China to China usually transactions and but you're saying that you've seen an increase of Chinese, buyers and sellers transacting through escrow, but then your overall quarterly report remains steady overall throughout the years. So where are those, I guess, American buyers going?
Well, one thing that I will note that I guess probably aligns with what you're saying is that we have seen, in particular the last 6, 8 months,
mm,
a massive increase in number of buyers, and they are in particular Chinese,
Mhm.
Hong Kong, some in the Middle East, but
yeah.
in particular Chinese buyers that want to pay with USDC or
Mm,
UST and stable coins. And so I think that, and it makes sense that they're using stable coins as a way of getting around some of these currency controls. If there's a will, there's a way.
sure.
I know quite a number of Chinese that are extremely deep
Active.
in crypto.
Apt.
So yeah, I don't think it's really that big of an obstacle for people
Okay.
that want to. Maybe if you're just average Joe, but I don't think that it's really an obstacle. Um,
But why stablecoins and why not like Bitcoin?
Well, okay, so unfortunately, despite my many efforts, you guys do not accept transactions in any form of cryptocurrency, whether it's stable
Yeah.
coins, Bitcoin, or anything else. And so we then have to use alternative platforms. And uh, look, there's problems. Okay, the problems are that none of these are particularly fast or efficient at processing these transactions. So
Mhm.
if you're paying in USDC, then you have a fixed stable price, right?
Right.
Stable coins are pegged to the US dollar. And so your price doesn't change with time. Your price is stabilized. But if you're paying in Bitcoin or any other cryptocurrency that is not a pegged currency, then uh you are I actually hate the word currency. I don't think Bitcoin is a currency. I think it's money, but it's not currency. But anyways, without getting into the weeds of that, let's say you and I make a deal. We're going to sell XYZ dot AI for, uh, for I don't know, $15,000. Okay, and so you say, great, I'll pay it, Andrew. Let's do the deal, and I'm going to pay you in Bitcoin. Okay, so let's just say that's I don't know, point 0.1 Bitcoin. Great. So you're going to pay me 0.2 Bitcoin, whatever the number is.
Mhm.
And if we haven't agreed on a fixed amount of Bitcoin, we've agreed on a dollar price, then
Right.
by the time, so now let's say we both agree to an escrow transaction, you send the Bitcoin. By the time that Bitcoin arrives, by the time they accept it, by the time they flag the transaction as, okay, we've got the Bitcoin and, it's time to transfer the domain name. In general, in my experience, and again, this isn't a reflection on escrow.com because you do not process transactions in Bitcoin or any other cryptocurrency. But in my experience, it's generally like 2, 3, 4, 5 days by the time between both parties log in and accept escrow to that third party escrow platform says, we've got the money, transfer the domain.
Yeah.
You're talking about minimum 2 days, could be 5. And in that time, Bitcoin could have gone from 60 grand to 100 grand, or it could have gone from 100 grand to 60 grand. And
Mhm.
so it's impossible to peg a price. And that makes escrow very complicated. And it puts people in a very difficult position, a position I've been in many times, which is like, okay, we've agreed on a price. If we can't transact in an instant, then basically that price is a moving target. And then one party is going to be unhappy. If the price of Bitcoin goes up, the guy who paid is in Bitcoin is going to say, oh, I should be paying less Bitcoin. If the price of the Bitcoin goes down, then the guy trading the domain is going to say, oh, no, I want more Bitcoin. Now, if it goes that way, and the buyer says, I want more Bitcoin, well, now you might have a problem where the guy says, well, we agreed on a price. I sent the Bitcoin, price of Bitcoin went down, and now you're saying you're not transferring the domain unless I send more Bitcoin. That's not fair. And I said, well, then you don't get the domain, right? And
Yeah.
then it's like, okay, I'll send more Bitcoin. Well, the price of Bitcoin went down more, right? If we were in the situation we've been in for the last few weeks, the price of Bitcoin went down more. And so
Yeah.
you say, I'll send a little more. And by the time it gets flagged 2 days later, it's like, oh, the price of Bitcoin went down a little more. And so, I'm exaggerating, but it can be a very dangerous, difficult, problematic way to do a transaction if you can't transact in real time, or if you haven't agreed upon a fixed amount of, the proxy currency that you're going to transact in. I'm looking at 3letter.com. This was a little surprising to me. Again, we're talking uniquely. It's interesting that suddenly everything's about median price except when we talk about AI sales. When we talk about AI sales, we're talking about mean, and we're going to, because that gives you this headline of 300% increase in data. Anyways, the whole industry thinks that they're super clever because they're 300% increase in data. Shut up. Anyways, 3letter.com domain names. I see the median price of 3letter.com's dropped from 120 to 47. I find that super interesting because, I mean, I guess I can only attribute that to like, there must be a lot of wholesale 3letter.com transactions happening, which is also interesting and which also anecdotally leads me to believe that a lot of that demand is actually going to China.
Mhm.
And so that's an interesting anecdote as well. But that's for the median price to be 47 grand. You need a lot of wholesale transactions because I mean, we do a fair amount of 3letter.com sales. And I mean, I don't know, I can only think of one that we sold under 100 grand in the last 2 years,
Well,
maybe.
here's where I want to kind of chime in because yes, the median price is more or less kind of held steady, right? But what that's not to say that this data shows anything about what's happening at the higher end, right? Let's just
Yeah, because
imagine
you're
for a
ignoring the
moment.
mean now. Now suddenly you guys want to talk about the median instead of the mean.
But the
This is
thing
where
is,
the mean actually could give us
yeah,
some signal. If we had, and again, it's meaningful because you have a large sample size. But well, actually, I don't know how many 3letter.com transactions happened, but um, I have to believe that it was a pretty decent amount if the the median price is 47 grand. Um, but anyways, neither here nor there. I
yeah,
I I I think this is actually a really interesting. I can't make a lot of sense, but I think there are some very interesting anecdotes that come from that. To see that median price drop down to 47 grand
yeah,
indicates that a lot of wholesale transactions happened in the 3letter.com market. And, you do see this nice, very steady. That's what you want to see as an investor. This is why always said three-letter.coms to me, it's like a brick of gold with a lottery ticket. That's what it is. You got a brick of gold. They very rarely go down in value. If you're buying, in and around that median price, probably let's say the right price for an investor today is 20 to 30 grand, depending on the quality, 20, 35 maybe for really good stuff. And although the really, really good stuff, doesn't come to market very often anymore, but at the wholesale. But
Yeah.
I think that, I think that if you included the mean here, my guess is you're probably looking at more like 150, 180, if I had to guess.
I think it would be a lot higher, to be honest,
Maybe
because
even a lot higher.
yeah, it's really just the idea that I think this perpetuates throughout the data set, besides just what we're talking about with .ai, is the idea that on the high end, things are exploding, and on the wholesale end, it's more or less flat, and it will continue to show that trend, right? But this data didn't show that because this is literally the median, one dot on the sample.
Okay. The rest, I mean, to me, I've said this before. I think for four-letter.coms, it would be much more informative. I think that this data doesn't mean anything without pulling out the four-letter.coms that represent a word, right? Four-letter.com strings, acronyms, random strings of four letters. That's sort of a commodity, and that commodity has a price, a liquid price, call it $1,000. And uh but then you have four-letter.com words, which in my opinion are like basically the holy grail of domains, is a four-letter, easy to spell, pronounceable word. But in general, four-letter words sell for good money, right? And so even ones with negative connotation, they still sell for 5-6 figures. So a four-letter word should be extracted from this data, and we should have two different category sets: one for four-letter words, or four-letter, maybe you could say everything included, and then one for just four-letter random strings, no dictionary words.
Yeah, so there's always that, but I also think, what we are just saying about standard deviations and stuff like that, I think that will also shed a light on this as well. I don't think you necessarily need to separate that data set out, to be honest. I think just even at the top end, you'll be able to see that, the valuations for those are going to explode. And if they are
Maybe,
exploding, no, it's going to
maybe,
be, the
maybe, but you're not gonna see like some four-letter.com. Like, for example, I sold abtc.com to Trump's family for their Bitcoin thing, right? That's a random four-letter, right? And it sold for, I don't remember, almost 7 figures. And so, um, uh, you know, that would be a meaningful standard deviation above a randomized, above the data on a random four-letter.com. But it is a mixed signal, or it's even noise if we're trying to analyze what does a four-letter word sell for,
yeah.
right? So I think it is two different data sets, to be honest, between four-letter, because what you have to understand is there's not many. There's really only a handful of, let's say, commoditized categories in domains. It's
Mhm.
two-letter.coms, which have a very low sell-through rate, so it's difficult to statistically analyze. Three-letter.coms, slightly more. Four-letter.coms, slightly more, or a lot more. And then numerics. So you got two numbers, three numbers, four numbers, five numbers, six numbers, and those are all statistically relevant, um, um, with varying sell-through. But
Yeah.
um, those are the commodity categories, and so I think those are really interesting and powerful signals, because what those commodities, even though that's sort of the wholesale commodity floor price, the fact that there is a floor price, the fact that there's sort of a known and observable floor price at which these can be liquidated at a moment's notice into the market, and there's very little fluctuation. It's not highly volatile, that floor price.
Mhm.
Um, that is a very important indicator. That's a really important signal in the domain space. In fact, it's the most valuable price signal that we have in the domain space, is the price movement of the floor of those commoditized categories. That's the most important pricing that we have. The rest is all based on outliers. The rest is all based on hope and narrative and wow, that 4-letter word sold for a lot of money, and that's important to know. But every single one is a snowflake. They're not a commodity, right? And so there's not a lot of signal. I've always said, like, when we're talking about premium domains, another domain that sold is not a good indicator of what your domain is going to sell for, because every domain is different. The buyer for every domain is different. The circumstances, the variables, they're all different. And so the only things that are relative are these commodities, these random 4-letter strings, random 3 letters, random 2 letters, and then the numerics. These categories are a true commodity and they offer real price signal. And then the variation on that price signal kind of tells you, is the domain industry directionally moving up or down or neutral, right? Look, I again congratulate Tony on his promotion to director of operations. And in this role, I have very high expectations and some demands. And so I will start this out by saying that I think that Media Options, myself and my team, have been really strong partners and have looked at ourselves as partners of escrow.com for a very long time. But in particular, over the last 12 to 18 months, I would say that escrow.com has fallen off dramatically in its level of customer service and in the competency in which those transactions have been handled. And I don't know, that blame can fall on anybody except for the leader. And I take that same blame upon myself when my company falters in any sort of way. I have tried to get your fearless leader, Matt Berry, on a call. I don't seem to be important enough for Matt to get on a call with me. And so I'm going to simply lay out a few of my grievances that we've had over the last year or so with escrow. And I want to know if you have answers to how escrow.com is looking to address these problems. And maybe you don't have answers, but at a minimum, what I'm hoping for is that I'm acting as a voice of reason and as a voice for our industry, because I know that many people have these same concerns. And many people may have not even identified that they should have some of these concerns. And so what I want to do is highlight them. And I want to say upfront that I have absolutely no interest or bias here beyond the improvement of escrow.com. And that is all I've asked for. I've asked for my grievances to be heard and for them to be addressed. And I think I've earned that with my loyalty to escrow.com over a really long period of time, that unfortunately over this last period of time, I've had to lessen because of the items which I'm about to note. Now, I am not going to list any domain names or any identifiable information because that wouldn't be fair to me, you, or the customers involved. But there are what I think is useful here is that these represent categories of problems, and those problems need to be addressed. So, this first one, okay, was a co-brokered transaction. It was us and a co-broker from the industry that everybody knows and loves. And there were very clear, things laid out about how the commissions should be split. And yet somehow our fees as broker were being paid out to the other broker. And then it's like, we didn't even notice because I just always trust that we get paid. And then my
Wait, let me correct you.
my fearless Latina that Matt made the dire mistake of allowing me to take from escrow.com, was able to, audit some of our transactions and realize that literally we were not being paid. And
Let me
so
correct you right there, because it wasn't to the broker, it was to the seller.
Yeah.
what?
It wasn't a co-brokerage, and I set up that deal when I was working there. That's how I know that it was beautifully done. And of course, but the funds were not being sent to the broker; it was sent to the seller. I'm just,
Right, the seller would get it.
clarifying
And
that
again, I'm not trying
because
to this is not the time or the place
right.
for that. But the
But
point
I don't
is,
want the broker. But I don't want the broker to come out there and be like,
No, look,
you
we're
know, I
not
would have
saying anything.
told you.
No. My point is simple. That is inexcusable. You guys have one job. That's to pay people. Take possession
Mhm.
of funds, take possession of property, and distribute it according to the terms agreed upon. One job. And that is the job we expect. And I, unfortunately, have blindly trusted Escrow.com to do. And yet, in particular, over the last 12 months, we have observed that, oh shit, you guys aren't doing that job. The last one that I'm really going to get into here is one that's also really problematic, and that's confidentiality, right? We're paying extra for concierge service. And then what happens is that oftentimes the person acting as concierge between the buyer and the seller forget who they're talking to. And they send the buyer information to the seller and the seller information to the buyer. And it's like, what that creates you cannot even begin to imagine the amount of liability and negligence that creates for us as a broker.
Mhm.
It's unacceptable. Again, it's like, why are we using you? We're using you to maintain confidentiality, increase trust, and ensure a safe transition between funds and property. And the confidentiality part is as big or more of a value proposition than any of those other components. And so, especially as a broker. And so, anyways, look, one thing that the underlying thread in all of this is that there is disharmony in the land. One hand isn't talking to the other. People doing certain things may not be qualified for the job they're doing. I don't know. It's not my problem. I'm a customer.
Mhm.
But what I do know is that you've made it impossible for us to do all of our business with you anymore because you're losing my money and your only job is to pay me my money. That's your only job. So, anyways, um I have tried to take a more direct approach on this, but the truth of the matter is that when I speak to others, my peers in the industry, everybody shares the same concerns. Many people were not aware of some of these issues, but we are seeing them firsthand. And the last 12 months in particular, it's really been painful.
Mm.
It's been painful. And
And real
honestly, to me, I personally feel insulted because I have spent a tremendous amount of time with 4 generations of people that were managing escrow.com on behalf of Freelancer, on behalf of Matt, and I'm not seeing results of the feedback I give. I'm not seeing improvement. I'm seeing the opposite. I'm seeing dislocation and chaos. And I don't think it's necessary. I know that it can be done better. And we as the industry need escrow.com to do better.
Mhm.
You guys are one of the most important businesses in our industry. You serve an absolutely critical role, and it's a very narrow function. It's a boring business. It's a vanilla ice cream business, and you just have to serve it right. That's it.
Mhm.
And I know some of your customers, including ours, are not easy all the time. But I think if you built the tools we asked for, you'd have to deal with us less. But anyways, you've been a good sport, and none of this is directed at you. I think you actually have been a tremendous light in a cave of darkness over the last year. And so I welcome your transition into director of operations, where you actually now maybe have the authority, if Matt will take the ball and chain off your ankle, and allow you to. I think you're incredibly competent, and I think that it's exciting to see you in a role that can actually make a difference, right? I know you had to sort of talk out both sides of your mouth before, but you're in a role now that has some authority to make some changes. I don't think that these are like big, costly changes. We're not trying to like turn the Titanic on a dime here. It's just quality control, it's process control, it's,
Well, and
improved
and really
service,
quick,
and it's
Andrew.
a lot of this. In fact, I would almost go so far as to say 80% is communication.
100%. And I think that really speaks testament to, and I won't go into any of the specific elements here out of confidentiality and stuff, but, I think that just speaks to, in general, the number of things that we've had to handle manually because of the fact that every state, every jurisdiction, every person, everything, shape, or form has to
Yeah.
get a little bit different flavor of escrow, right?
Yeah.
So, of course, and I think this is even a conversation I had with Matt, is like, if we were to double or triple our volume tonight, what's going to happen? Right? What's going to happen?
You wouldn't be able to handle it. That's the thing. And I know that Matt's looking at big greener pastures and trying to get marketplaces join Escrow, but you certainly would not be able to handle it because I know exactly what your systems look like, and they're just too manual for
So
marketplaces to go.
So this is a great segue. And if you have something more to say, you want to say, by all means. But otherwise, I was going to transition to something. Believe this on a positive note, which is that I saw a recent announcement that you guys are launching you're going to launch a new system. I forgot where I even saw this.
yeah. So
Tell us about that.
so we're launching Escrow 2.0, which we're moving all of our legacy tech stack, especially on the front end, over to the new freelancer tech stack. So that means you guys are going to have a brand new, slicker interface with more information that's provided, more dashboards to show you what the heck is going on, right? And more information provided to both buyers and sellers on that front in that respect as well. That also unlocks new potential and opportunities for us to implement things like, for example, AI chat or, the additional auxiliary functionality to supplement the existing service delivery that we already have. Right?
Amazing.
And that's also a large part of this as well, is I need to kind of look through this and find some ways to additionally help automate some of these things. Because again,
Yes.
this is maybe a testament to Sofia and how good she was back at Escrow, but previously you would not believe the amount of things that she had to manually handle for you specifically on your account to make sure that things were smooth. And, she's here now, so it makes sense. But,
Are you trying to imply that I'm high maintenance?
No, you weren't high maintenance. There were other accounts that had more transactions, arguably lower in value, and literally my entire day was spent on just fixing things that
Yeah.
you guys didn't need to know because I was just trying to do that without raising any alarms, I guess, but
yeah. So,
just to make your life easier.
That's what I'm saying is I think Sophia is amazing and she will always be amazing, but I cannot, I mean, maybe not me specifically, but I'll say for the business, like we cannot expect to run a business off of the backs of people like Sophia, right? Like we need
Yeah.
to find processes and ways to automate and ways
Yeah.
to, and so far,
I think she would agree more than anybody.
No, seriously.
So that's what I'll say to that is, I do think your pains and your concerns are heard across the organization. And I don't want you to feel like, nobody knows about this shit because people do. It's not a simple fix, right? Because we're turning what is fundamentally, from a regulatory perspective, built to be a manual process into trying to build it into a scalable business, scalable global business. Right. And ultimately, those are going to come in steps. Like this is not something that I can say, in the next 3 months or in the next 2 actions that I'm going to take that this is all going to go away. Right. We need to find a way to not only scale up our processes and technology, but also our people at the same time.
Yeah, so
So,
quick question around that. So what does that mean in terms of not just for us
yeah.
on the front end, but what does that mean on the back end, I guess?
Yeah. So some of the things that I'm looking to do, again, not speaking too much about the specifics about what I'm trying to do is I'm trying to, number
Cool.
one, make sure that the right people are touching the right things. Right. And that we have the right amount of firewalls and controls and checks and processes that we have to make sure that individuals who are handling one thing do not have the adverse effect of being able to affect other things. Right.
Mm-hmm.
And a couple of other things is, again, firewalling the different functions of the organization such that, one function of the organization does not fundamentally, with different motives and incentives, be able to affect the outcomes of another part of the organization. Right.
Mhm.
Lovely.
those are going to be some things that I am looking at, and some of the initial low-hanging fruit items that I will be, tackling. And of course, automation and technology being what they are from the product side of things, I will be pushing for those as well. But that's in essence, long story short, what I'm planning or what I'm trying to do to kind of come to the table with some of those solutions. I don't have exact answers that I can share out in this podcast, but more
Yeah,
to come.
but I think if I'm not mistaken, the date I saw was like more or less now, like coming up in the next week or two or something. No?
Yeah. So you mean the Escrow 2.0 thing?
Yeah.
So that's coming sooner rather than later because that has been in the development pipelines for a long, long time.
Okay.
Yeah. So that's going to be something that's coming imminently.
Well, that's
And
exciting. I mean, look, I think I think it's a welcome development for everybody. I think everybody will be welcome, very happy to see Escrow 2.0 coming out of the dinosaur age, and you know,
yeah,
uh,
Yeah,
so,
I think that there's a lot that, obviously you, Tony, cannot discuss, and I won't mention because of obvious reasons, but there is a lot that happens behind the scenes. There's actually the origin of a lot of issues. And if those were to get fixed, not as much as like our front view, but those need more imminent action. Because that's what, the people servicing us ultimately need to action and see and work through. And I know how prehistoric some of those systems are, and how you touch one thing and everything else breaks. And so if that gets fixed, I guess, that would already be a great addition and a great modification to the entire like experience, I guess.